Hey, hello. Welcome to another new episode of the markets. Next week, the weekly stock market analysis show, where we look at the technical charts and try to understand what happened the previous week in the market, and then plan for a better trade for the upcoming week. That's what we do. So let's deep dive into the charts first. Okay. What you see left is Nifty. We see that there is a slightly ascending wedge is seen there on the weekly, while an expanding wedge is what you see there on the right side of the daily, right? And Banknifty, it's a even more steeper, narrower weekly ascending wedge and a parallel channel on the daily is what you see, right? So the weekly pattern is showing that the markets have run up a lot, right? Let's look a little bit closer. So we had a big fall, right? A big fall, more than 4.5% fall from the very top. Nobody was heated up so much, and that's what happened the previous week. So previous week, yesterday, the week that has gone by, it started to slip even further, but then recovered. That way, it went into a volatile consolidation, you can say. Now it's a point where there's a change in probability bounce is possible from here, where the previous breakout zone can act as support, and then a bounce up from here could be possible potentially. But the correction is extended to 6% from 4.5 something. Banknifty similar fall, steep fall had happened in the last 2 weeks. Much more harsher fall, we can say, Banknifty, but it did the same like Nifty this week. It did fall, recovered, volatile consolidation would happen, and finally both of this ended flat, almost flat. Now look at what happened in the daily candles. So the last 5 days is a big dip on Monday, quick recovery, and then some attempted for the move up, some failed, then consolidation. So overall flat. Consolidation is what you say for 3 days, and first 2 days were very volatile. Same Banknifty. Monday big fall, Tuesday half recovery, Thursday full recovery, then some volatile up and down moves. So very volatile consolidation after extending the correction to 6 to 8% is what happened in the market, right? So that's a daily candlestick. So this hammer at a trending point could act as a reversal, but this does not seems to be a downtrend for it to indicate that there is potential for a reversal, because it's still at the top, not very top also. So neither is a full hammer. It's almost like a hammer. That's all it is. Right? It's not a perfect hammer either. So, but regardless, this can be reversal if the high of that is breached, and market could manage to close and furthermore from there. Right? Longer wick size indicates there is good support on the downside. That's what more matters. Now look at Bollinger Bands. There's no doubt in anyone, if at all there is any doubt in anyone's mind as to what is the market actually is going up or down or sideways. This Bollinger Bands clearly indicates that it is having a sideways consolidation with a bearish buy. Same with Bank also. Right? Whenever it is rising up, the Bollinger Band expands like this. Whenever nothing happens in the market just moves up and down and remains flat. It's sideways contraction. This is how it looks. So market is sideways, no doubt about that. Let's just get a summary. So market went volatile and consolidated previous week and closed flat negative against Nifty. Is still below the 50 exponential moving average and still closed below the 25k. Remember, we had only a 6% correction in 3 weeks, and it's a rally of 70% that we're talking about from June 2022, previous week low. Banking index also slipped last week, but it bounced back quickly like what you see in the wick of the candle, and it's 288, a little more deeper than the Nifty. It's not flat actually, 0.56% lost. So overall it extended the cut to 8% of correction from the very top. That's what happened in the last 3 weeks, right? A sharper cut than the Nifty. That's a summary about that. Candlestick does not give much clue, as we had already talked. Bands give the indication that market is sideways for sure. Let's move ahead and see what the momentum and the trend indicators are showing. So momentum actually slipped to the sideways, right? That's exactly what happened. Previous week it was sideways on the medium term, weekly on the Nifty on top, and Bank to the right on the down. Right side you have daily charts. Momentum had recovered and climbed back to the sideways. So overall, medium term and short term, weekly as well as daily, momentum is absolutely nothing but sideways. This is a summary of this. If you look at ADX, it's a trend indicator, you can see that nothing has happened there. It's not even more bearish. It's bearish in the medium term and the short term. Sideways bearishness is what you see in the momentum and the trend summary. If you do a multi-time frame analysis, that's what it summarizes about that. Right. Moving on, the volatility index or the fear and greed index, India VIX, actually has cooled off. That's a positive thing. It had cooled up 6.5% to close the low volatility regime of 13.22. Right. The next thing is the open interest analysis. That's what the weekly expiry that's happening on October 13th and 14th. And we have a PCL which is bearish. That's for the options. Open interest. For the futures open interest also it's bearish. It's long unwinding on the Nifty and it's short build up. So if you look at, you can clearly see the levels, right, of the Nifty on the left side and the Banknifty. That numbers are put in here. So highest put writing is seen at 25,000. Highest call writing also is seen at 25,000. So 25,000 is where the market was consolidating in the previous 1 week, and that's a zone, critical zone. So any big down from here would be costly. Any breakout would be a recovery probably. Recovery if it is closing above the exponential moving average. So that's what open interest data for the next weekly span is right now. The second highest support of put and call writing is in at 24,500 and 25,500. Similarly, Bank Nifty is a wider range slightly compared to the Nifty. 51,000 is where the highest put writing is there. 52,000 is where the highest call writing is there. Second highest put and call writing is in at 50,000 and 51,500. Right? PCI is bearish, futures is bearish. We already seen that. Now looking at the support and resistance level, another way to look at this charts like this, right? So basically we have the 20 exponential moving average, 50 exponential moving average, 100 exponential and 200. Then you have the previous resistances zone that is marked here. Then you have the Fibonacci retracement level from the top, from previous swing low to the top. That's how we derived this figure. So basically the first resistance will be 20 exponential moving average. First thing will be 25,000, how to clear that, and after that 25,300, then 25,700 where the gap is there. Right? Likewise downside, first support, major support will come in at this 100 exponential moving average. So if that is breached, 200 exponential moving average. Right? Before that you have previous swing lows that comes near the 24,300, 24,000, all this round. So the rounding numbers also is considered for the finding the support and resistances from the charts. So we find it two ways. One is for the open interest, second is from the technical charts. Banknifty also similarly. First major resistance will be at the 52,000, right? And then the 52,800 where the gap is there. Similar downside for support will be at the 51,000 where the major 100 exponential moving average support is there. That is means we come to the Fibonacci 50 previous swing lows. First previous swing low, second previous swing low right here. So based on this is what is derived at for the Nifty Bank. Make a note of that. 25 resistance, 25 to 89, that's 25,300, then 25,750 supports, 24,700, 24,400, 23,894. In between we have 24,000. There also can be a rounding number. So Banknifty similarly resistance on that side is 52k because it's a combination of 20, 50. Both exponential moving averages comes near the 52k and it's a rounding number also. 52,880. 818 above that is a gap, that's resistance. This is after that 53,358, 53,742. Similarly downside support for the Banknifty is coming at 51k. Just 100 exponential moving average are coming very close by that. That 5,100 and 50,000. 50,000 is a rounding number. 5,100 is what Fibonacci and the previous low, right, comes in. So that's the support resistance level. So small. So now that we have seen the support resistances, open interest, momentum, volatility, trend, bulge bands, price patterns, I think let's move ahead and see how the industry, different sectors performed. Right. So this is the IT sector, maintaining the bullish momentum of the week on the weekly charts. The IT sector that's maintaining the weekly charts bullish momentum. Now here you have the auto index also is maintaining the bullish momentum. Pharma also maintaining the bullish momentum on the medium term. FMCG slipped in the sideways. SMCG is the sector that got badly hit during the last week and the previous week also. It has fallen down very sharply. The reality index has already slipped. So reality and FMCG has slipped. Other four sectors, metal, auto, IT, and pharma, they are still maintaining the positions in the medium term. But what matters to us to take a long trade is often a multi-time frame analysis of having a bullish momentum in both time frames on the medium term as well as short term. So none of the sectors are eligible for that. That means you just have to wait before taking any long positions. But as a matter of fact, previous week there was some recovery that has happened in the IT sector, 1% up, auto sector 2% up, pharma sector 2.1% up, FMCG, ignore that, and reality also went up. So almost all the sectors have recovered. Only the metal and the pharma sector went down previous week, and for FMCG actually is only sector that has gone to bearish momentum on the short term, and none of the sectors are eligible to have a bullish momentum in the both time frames. So you just have to wait. Market is sideways for sure. Now we have the heavyweight stocks that contribute maximum to the index. There are 5 of them, 7 of them actually, 3 plus 4, 7. Beginning with HDFC Bank, you have another attempt, a failed attempt to break out once again. Right? It was a consolidating. There is a parallel channel also. Once again, rounding pattern also is there. Exactly the same place where it failed for at least 10 times now. Once again, it has failed and it's continuing to the consolidation downtrend. Now it slipped in the sideways. Trend is about to change to be the storm. So sideways momentum on medium term and short term. Lines also badly hit, fallen into sideways and falling with huge 2 weeks of correction. HDFC Bank, big red candle since 3 weeks, fallen into the sideways. So all 3 major big heavyweight that contribute the maximum to the index is in the sideways from the top. Now you have Infosys, the only major heavyweight stock that's maintaining the bullish momentum as of now, we can say, on the medium term. TCS also had fallen to the sideways. Kodak Bank fallen to the sideways and trying to recover. ITC, when the FMCG got hit, it also has fallen to the sideways. So overall, it is sideways for all the heavyweights except for the Infosys. That's the situation. Well, things are not that great with heavyweights, but not bad either, very bad either. So if you consider the sectoral analysis and the heavyweights, things are not very bad, but things are going sideways. But overall, that's what you see. What about the broader markets? Whether you mean the mid cap and the small cap. So it has been a spectacular rally in this. They continue to do that. You see, a green candle is what was formed last week with mid cap market, and there is a momentum bullish. Positive reverse divergence is there, which indicates that there is every likelihood that it can make another new all-time high if the target is met. So that's a very positive thing. Mid cap and small cap, it's remaining positive and headed back to make all-time high. Good recovery has happened there, right? So that's a summary of the indices, sectorial and broader market indice analysis. Sectorial analysis and heavyweight analysis showing there is sideways. Overall sideways momentum and broader markets are very positive. But this is the guy who is creating trouble. This is the only slide that is so pessimistic. So look at this. Fyers was selling 27,676 crores last week alone, and remember the previous week it was 40,000 crores. So there is 70,000 crores of rupees of selling has happened from the Fyers. Why is that happening? No clues, but that is what. And the market is surviving at this level instead of crashing down only because the mutual fund monies from the domestic institutions that has fallen is 31,364 crores. It's only this market has not fallen. If at all this was not there, or if they bought little or lesser, then things would have caused a crash. Right? So if I selling is a concern, and the net derivative longs also, which net if I DIs were moved down on the FNO. Right? So figures are mentioned here. So all how they were, you look at this chart and understand. But if I am selling heavily is a concern. Let's move and see how the global cues are there. So the global markets, the US market, will understand. We will study the commodities and also the currencies. So currencies is below. Dollar has spiked up another 0.4 previous week also it had spiked up. So after finding a bottom in the consolidation zone, it was spiking up. So dollar is getting costlier. 103 nearby it is going. So sideways and rising, and once again it looks like it is trying to get back in the bull zone. So the second week of dollar rising up, and although not directly correlated, the rupee is also becoming even more weaker. It is above 84 now. So it's point only slight percentage up move, the charts that we are seeing. So this is central bank managed thing, the US dollar currency pair. So it doesn't move just like that, but the rupee has become weaker once again. Now the crude oil is 1.2% up. Crude oil was spiking up after the war fear came in, and it came very close to the trendline channel and then slightly dipped, but overall we are seeing that crude is rising up because of the same reason, 75.44. The gold is spiking up, but spiking up very slowly. Gold did consolidate and did dip little, but immediately recovered all that it lost and was flattish with the momentum back to bullishness and rising. So gold is going to make another all-time high, is spiking up and wants to break out. That could be because the people have worries over the equity market, which is correcting right now, and people are finding safer havens. Right? And looking at the global markets, we analyze the three US indices, that is the Dow Jones, Nasdaq, and the S&P 500. All of them are bullish, and all of them are near all-time high. Crazy, right? So it's a very positive thing that US markets are green. It's a very nice thing considering that US is the mother market. Right? So that's a positive cue there. Rupee weakening is bad, crude rising is going to be bad. Gold spiking up when the market is correcting is also not great. But US markets are green. So all positive, very positive global cues. So all cues are not bad. It's the global cues, although there is war cry and all this going on, still global cues, the mother market is not showing that fear. That volatility or that up move may extend till the elections that are coming in November. So there's going to be some volatility around that in the coming month. Probably this is the pre-election rally or something in the US, right? Never know. So that's all about the analysis. Now we are going to actionables. So we have two actionables. We have actionables on the stocks and we have actionables on the FM. So let's look at what's there on the stocks. So I'm long is shaven now, because that's what charts are saying, right? Look at the national aluminum, it's an Navratna company, it's a PSE. It's huge volumes, flag breakout is what is happening, and there is potential for further up move on its to the store. Because momentum is rising, volumes are good, trend is also rising as per the index. So this Tata Chemicals, it was consolidating since a long time, since 2021 or 21 mid. And now it is at this same spot for the third or fourth time. There are previous breakout, now once again it is at the spot. So have tight stop losses, and then if it works out, you can get a 1:1.5 plus over. Almost just climbed the bull zones, but it's decent enough. Trend is also bullish. So two stock picks. Now we have the FNO strategy. That's a weekly Batman strategy, which is completely hedged and very low cost margin requirements. So basically selling at far OTMs, and then even further far OTMs buying as inside hedge. Right? Selling far OTMs and selling far OTMs as inside hedges, and then taking another far OTM outside. But you sell it twice what you are buying as inside hedge, right? So even if this outside hedge is not there, still it is safe but not completely hedge. So this is a Batman strategy. You can check my playlist on trading strategies to understand that. But the thing is, as long as the market remains in this range, you'll make a reasonable good profit. But if there is a spike that's happening going beyond that range, then you can make some more profit. But if it further moves on the other side, you'll have to roll up or roll down and adjust it or exit it, bear the loss. Right? So exit before the expiry day is a strategy. It gives a very good ranges why I like this, but profit is not that great. RiskReward is also not that great, but yeah, premiums are less, so you can't expect much from weekly expiries. That's the best that you can expect. But POP is near to 65. We're okay, right? But market is going very volatile. It will be difficult to manage. But it's completely hedged in low margin requirements. risk defined strategy, defined strategy in the weekly Nifty options, right? Batman strategy, that's what it is. Let's just try to wrap it up. So we have a volatile consolidation week. The market extended the correction to 6% from the earlier 4.5%. Right? 6 to 8 on the Banknifty, right? So that's from the all-time high that we're talking about, right? But the close was very flattish, right? When volatile, corrected a little more, but consolidation and then close flat. But the Fyers are continuously selling. That's the worry. Overall, the correction since the 72%, 67 to 70, 72% of rally from June 2022 is maximum is 11%. And just corrected only 6 to 8% Nifty and Banknifty. So more could come in, I don't know. Let's try to bucket the different parameters which are in favor of the bulls and bears. So a few things are for the bulls. As you know, there's a change about the bounds that we discussed in the beginning. When the previous resistance can act as support and then a breakout can happen from here. Bounce up. Not a breakout, a bounce up after a fall. That possibility is there, right? So I'll always watch whether it happens or not. Weekly hammer probably could be potential reversal. No, but it's not a exact hammer like it's almost like a hammer. But let's see. Now, heavyweights and most of the sector indices and broader market, we've seen that it's gone sideways, but not many of them have gone to the none of them actually, except one ITC. None of the heavyweights or major indices or broader markets are gone to the bear zone. So in fact, the broader markets, the mid cap and small cap, we are seeing that it's bouncing up and getting into for another rally with momentum remaining in the bull zone. So that's a positive thing. US markets are green, is very positive. India which was cooled off last week, right? Falling back to 13 levels of volatility. So these are factors in place of bulls, but in case of bears, a lot of things are not that great. Bearish candlesticks, red candles, momentum falling sideways, trend is bearish on both time frames. Short build up on the futures high, bearish build up. PCR is bearish. FSLE heavy. All these are in favor of the bears. So you have to be cautious. You have to refrain from taking long positions in a short stop process, because we never know if the market has found the bottom or not. Look at the candlesticks, read the positions and then bet on it. Technically, market has reversed. It is not decided. It has not recovered back to the 20 exponential moving average, or neither the 50 exponential moving average also. So it is not decided whether it is going to make more corrections or not. And no major corrections have happened so far. And the rally has been very heated up and very vertical, right? So my view remains mildly bearish for the next week, as the charts are indicating that. So always keep in mind that technical charts may not work perfectly when there is a black swan event like war or pandemic or Russian, so things like that comes in all of a sudden, right? We can only think about technical charts as the means of studying the probabilities of resistance and support. That's all. Okay, so next week 23,500 and 26,000 wide range, just like in last week. That's what I'm looking for the Nifty. 300 and 53,500, another wide range that I'm looking for with the Banknifty levels. As long as 26,000 and 54,000 is recovered back, only then we can expect a continuation of the next leg of a rally. Until then, it may consolidate. Always hedge your positions, hedge your portfolio. That's the best thing that you can do. You can also use hedging as rental income by using strategies like cover call and cash ticket put, etc. Check out my playlist for details on that. So that's all I have. I'll be bearish by a sharp group for the next week. So if you like the video and content, subscribe and like and share and comment. I'm also active on other channels, especially on the Twitter or X. I'm more active on daily basis, putting detailed technical analysis daily. So subscribe to that also if you want. Thanks for watching. Happy trading, happy learning, happy investing. Bye.